Welcome back to the channel. I'm Crypto Trend Trader and this is Bitcoin TA in a minute. But before I get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please trade at your own risk. Alright guys, there's a lot of stuff going around the internet right now where everybody is convinced that we're actually in a symmetrical triangle, and to tell you the truth, I can understand where that idea is coming from, but I have a contrary idea. I don't believe that that is correct. I think what's happening right now is we are filling out a descending triangle, okay? So what we have here is we came to the top and then we bounced down and we put from our A to B, and then from the next peak it's B to C, and then if you look from C to D, that would actually bring us down past this low that we put in here, which I think what happened is I think this pattern right here is the same as this right here, and then I think we kind of just consolidated, but we're going to get that final push down. And I think that final push down, based on confluence of quite a few different things, and we're going to go over those right now, based on confluence, I believe that the next point is going to be in this region down here, the 75 to 9,000 range. And that's a big range, but I'm going to explain to you exactly how I came to that and where I think it's going to be. So we had already talked about in the past how we came up and topped out here, and then we came down to the 236 and then the 382, but we had never made it to the 0.5. Okay, so what I think is going to happen here, I think around that 0.5 is going to be our target. And there's two ways an AB equals CD situation can play out. They can either be equal or one could be longer than the other. But the way we actually can draw this is you could go to either one of these points because they're essentially like the same distance, but it gives you a little bit different of an angle. But if you take that AB and then you put it where C is to give you an idea where D is, that would be our final point down here, okay? And that's going to take us down to the 76.50 range, and that will put us over here right in this area, nearing the bottom of this fib circle as well. So I'm going to get rid of that one real quick, and we're just going to move this one over here now, and that actually gets like the timing a little bit better of it. But you could basically see it's going to put us in the same area either way. Alright, so that's our AB equals CD price target. That's going to put us right here between, it was like 75 and 8,000. Alright, and I think that's a very high likelihood or good possibility that could happen. Now we're going to talk about a couple other things. And if that situation were to play out, okay, right now I have this descending triangle drawn out, and I think a lot of times what happens is you'll form out a pattern and then it will break, and then you'll form out another pattern off of that. So essentially what could happen here is we could break down here, put in another equal low, and that would give us the descending triangle. We'll most likely get the bounce here, and then we'll come up to, you know, one of these key points over here. But now we're going to go into how I got this with the fib circle. So I basically had taken our fib circle from here, and then I was looking for confluence around these different levels. So I had lined it up where I was getting clear resistance and support off of these different levels. So it was very, very clear that this is being corresponded with. And the likelihood of this many points getting this clear of a touch, you know, and a reaction off of them, it's very unlikely. This is just luck. So when you put these things in and you start finding the right amount of confluence in different areas, it's not going to be perfect because different exchanges are going to move little bits different. So sometimes you'll have a higher high, sometimes you'll have the same high, sometimes you'll have a lower high. It depends on how it moves on the exchange. So it's important that you look at these things with just a little bit of like subjectivity to them. So if you take that in mind and you put all this stuff in place and you see where these touch points have come and where we're at, I think most likely what we're going to do next is, what we are going to do next is we're going to touch this ring. Alright, and when we do, we're either going to touch it right down here, which is where I had drawn let me zoom in here. I basically drew a line coming down here, and that was representing a smaller triangle that we were filling out. And then when we left that triangle, we had that spring dump down here, and then we had a massive pump. And that's when I was saying we need to look for a confirmed candle close above this point. And that triangle we had drawn is also exactly in line with this fib circle. So when we didn't get a close over that point, we knew that this rally was going to fail. So it came and dropped down here again, and you'll see it interacted again with that line that we had drawn diagonally down here, which just so happens to be part of a retracement as well that we're using, but I just use them so there's not as much drawn on the chart at the same time. But essentially what's going to happen here is we're basically going to roll over and we're going to come down, and there's a very high likelihood that the point that we touch at is going to be right here. We're going to touch 98.55 on August 28th. That's basically what this is saying, because the likelihood of us coming down here and two of these points lining up, you'll notice it interacts a lot more often than just some random spot out here in the middle of nowhere. So I think that's what's going to happen. We're going to come down here. We'll probably bounce around. We should hit this same trend line that's been pushing us down. And again, I have this as part of the triangle, but essentially what it's doing is it's pointing us to our target. Now it's not always right, because sometimes you'll draw those trend lines down like I had here, and you don't really see the interaction the same way to the point, but it at least gives you the ability to not have as many lines on your chart at a time. So what's going to end up happening, I think we're going to come down here. We're going to basically touch this 382 again, and again that's going to line up perfectly with those 2 points, the 97.29 area right here, of our diagonal line support we've had for this whole time, and then the one coming down. I think that's going to put us at the bottom of this triangle right around here in the 9200 range. Also a massive support coming from, you see that green line? That comes from way, I'm actually going to show you. I don't always show off all my secrets here, but I'm going to show you a couple today. You see that blue line comes all the way back. This is support for the entire bull run until we go parabolic here, okay? And that's very substantial. So you see it comes all the way up, and that's where we're dancing around right now. So let me go back to the smaller time frame. So that's this blue line, okay? So you can tell the importance of this blue line. So when we fall below that, the likelihood of us coming back down, and then you'll see, I'm going to show you another trick. I draw these lines in log and in regular, and then when you switch, you'll see now this one was drawn in regular scale, not log scale, and you'll see the reason I drew it was a very strong point here that we kept touching, and then we finally end up breaking through. We got the retest, and then it failed. When you switch that over to log scale, that's this line right here, and often you'll see an interaction with the difference when you switch them between one and the other. It's very strange how it works, but it's essentially just people looking at the same chart in two different ways, so you get reactions from different ways from people doing the same thing. So alright, so anyway, let's keep going. So we come down here, we end up basically hitting around this support line right here, and I think that's going to be a very strong support. It also comes in with where I have the bottom of the triangle drawn, so I think that's a very likely target. That's our AB equals, above our AB equals CD, but still, that's how we get the top range that I had given you, and the AB equals CD is where we got the bottom range. And right smack in the middle is the 0.5 for this entire wave. So essentially this whole area I think is going to be our target, but we're expecting to get bounces in different areas. Now if you're familiar with some of the different theories, Elliott wave theory basically says that when you get an A, B, C, D, the correction, which is what we're getting right now, that what's going to happen is on your CD wave, you're going to get 5 smaller waves of that correction. So what that's going to do, and it's a very complicated theory. If you don't know much about it, it's very difficult. If you take a lot of time and you learn it though, a lot of people trade it, well, a few people trade it very successfully. So there's definitely something to it, but you have to understand what you're doing. So anyway, so we have the first wave down here. We have the 2 wave, which is the correction off of the initial down thrust. And then from 2 to 3, which is our 3 wave, that would come down here and basically put us in the middle of this zone. So then we would get our bounce, which is the 4, and that's going to take us up. That would be the correction off of the 3. And the 3 wave is often the longest wave, but it's never the shortest. So it could potentially not come down this far. It could come down to like right here. But another very important rule is that the 1 and the 4 can only ever interact by a wick on a longer time frame. So if we're on this 4 hour, what that's saying is this maximum 4 could come up to, no matter where 3 ends up getting put in, the maximum where 4 could come up to is this 382, which again, look at that confluence. So now that makes me think, is there a possibility that this 3 wave is going to come in around here? Is there a possibility that 3 waves is going to come in around here? See, that looks pretty proportionate right there. So what we're going to do is we're going to do another measured move. from the 1 to 2 just to give us an idea, and then that's going to give us the 3. So we know that in order to not be shorter than the 1 wave, the 3 wave would have to come down at least to this point. So if that comes down there, and then again, just to give us, you know, a proportion, give us a rough idea, that would give us our move up, which is going to take us basically exactly to the 382. And if you look where that came in, it came in specifically almost exactly right at this fib circle here. So what's going to happen, we're going to come down here, we're going to get a reaction on this, bounce around, probably get picked up, hit this spot right there, we're going to get knocked down, we're going to interact with the fib circle and this line we have coming down here that we had been bouncing off. As a matter of fact, I think I had it just a little, yep, that's perfect right there. So we're going to get an interaction down here, bounce back up, probably touch it again, maybe get a spring, a fake out over that 382, and then that's going to fail, and that's going to take us down where we'll get interactions along the way. But essentially that's either going to take us down to this point and give us our triangle, or if you want to really dig deep here, because I know this sounds very bearish, it sounds like we're definitely going down, we're going to a new low, but think about what this pattern is. Right now we're in a descending triangle, which is typically breaks to the downside. After, you know, when it breaks out, it typically breaks to the downside. It's a distribution pattern. But look at this. If we take this down here, what is that? That's a flag, baby, and that's bullish. That's what accumulation is supposed to look like. Because what happens is it sells off, it comes up, it sells off, it comes up, and it gives buyers an opportunity to buy this asset at a good value. When we continually put in a higher low, people don't buy. They're not going to buy because they're not getting a good value on it. It just keeps creeping up, creeping up, creeping up, and sometimes it breaks to the upside and you get left behind. But most of the time what ends up happening is it ends up dumping down, because in order to get the price to move up, there has to be more buyers than sellers. And in order for there to be more buyers than sellers, people have to feel like they're getting a deal. People don't buy things at, you know, 1.25 times their price or 2 times their price. No, people want to buy things at 75% of their value. You know, they want to get a good deal. And that's what this is. In order to get a good deal, you need this to be a downsloping consolidation, essentially, with lower highs and lower lows. And that, my friends, is what I think we're doing right now. Because then if we came down here, we could essentially move that 5. So we have the same price amount. But look at this. Look where that comes in. It comes in at this red fib circle, lines up perfectly. And look at this. This red fib circle, again, let me go big here. And if you don't believe in fib circles or Fibonacci or any of this stuff, that's fine, man. That's completely fine if you don't like this stuff, you don't think it's right. But that is the December 2019 to January 2019. 2018, I'm sorry. So December 2018 to January 2019 low. Okay, and you'll see again as we go. Let me make this one just a little bit brighter. Oops. Oh no, I don't want to. Alright, there we go. So that's a little bit more clear. Basically, we got an interaction here, and the interaction we got there, once we broke through this fib circle, was the bull rally that we went on. Okay? So the likelihood that we would consolidate inside this pattern, come down, and then get a strong reaction, the likelihood that we could come down here and get a strong reaction when we reach this next fib circle, because again, I'm going to go down to it here. You see, and this is undeniable proof, I don't care what you say, look right here at this low, we came up, look at that, we touched the fib circle, we came up, we came back down, what did we do? We touched the fib circle, came up, dumped down, and when we dumped this time, we broke through it to the downside, came up, touched it, and then finally, once we had broken through that fib circle, that was the beginning of the rally. But that's an undeniable interaction with that. So when we come over here, I think there's a very high likelihood that we're going to get a strong interaction off of this one. And if you get this many things lining up in the same way, I mean, you're crazy to think that that it's just a coincidence. It's not a coincidence. It's all